Hi all, welcome to Crypto Charts and our daily review for October 14, 2025. This is now 6:15 a.m. Eastern Time. Let's review what the charts are telling us with regard to Bitcoin, Ethereum, Cardano, Doge, SUI, BNB, XRP, and Dash. Those are pretty much the cryptos that we're going to review this morning. Basically, the idea here is to review the majors, which are the big five, and then if we see based on their personal activity, I mean, if we can spot a crypto that's up a lot versus the market or down a lot versus the market, we can definitely analyze it in a different manner or pay more attention to it. Now, if we're going to look at basically what's happening in crypto over the last 24 hours, you can clearly see this red, let's call it the red day or a red forest of crypto. So if we start with the worst performing ones, at least on my list, Doge down 8%, Cardano down 8%, Binance down 7%, and so forth. Ethereum down 7%, Bitcoin is down only 4%, and TRX only 4%. So a sea of red this morning. I'm going to read some of the headlines later so you'll understand what's happening and what's behind this move, although the real news are going to come in now as US news are going to come out. So overnight, obviously, there are less news, and maybe in other parts of the world things are picking up. Obviously, the big bunch of news that are going to come out of the US marketplace in about 2 hours, maybe 3. So again, it's only, as you can see, 6:18 a.m. Now, if you're going to go back to the watch list, let me set things up. Okay, so let's discuss now what's really important to us as traders, investors, short-term investors in crypto. We want to trade, we want to make money, and we want to make money taking very little risk or as less risk as possible. And this is the concept behind this daily report. I don't have yet a fixed hour when this report is going to be produced and delivered on YouTube, and maybe to other venues as well. But let's start with the concept. Those who want to join are more welcome to join and subscribe to the channel. Okay, so let's start first with technical analysis. What are we seeing here? Bitcoin, as you can see, the huge drop in Bitcoin coming out of Donald Trump's tweet on Friday, and this obnoxious move, nearly 20% move in Bitcoin, including the spike and then the sharp reversal, the sharp move lower, and then the sharp move up. This is why it's called flash crash, because it moves up and down very fast. The stop losses along the way here triggered a sell-off, and on top of that, the leverage positions that started to get overrun by the brokers. Meaning, if you have 90% leverage or 80% leverage, and in this case Bitcoin is down 15 or 20%, you might get stopped out or flashed out of your position or liquidated out of your position. Keep in mind that the price action was way more aggressive in other cryptos, where they dropped in a matter of minutes anywhere between 30 and 40, sometimes 50%. So if you're leveraged 2 to 1 on a 50% drop, goodbye to your account. That's the drawback of being leveraged when an event like this happens. So again, it triggers a wave of selling, and who's making the money? Those who have limit orders along the way and are buying the way up. Again, who's doing it? is obviously a genius, and it's mainly those algos that are, I don't know if you can predict such a move like we had on Friday. That's beside the point. Now we're trading a normal market, and in a normal market there are plenty of trading opportunities that you don't need to guess. You just need to observe the charts, and this is what we are here to help you achieve. Let's take a look at, first of all, at the market after the crash. So after the crash, we've seen here a clear support level at 109,300. I'm looking here at this 30-minute chart. Why 30-minute chart and not 1 hour chart or 15-minute chart? Because with a 30-minute chart you can see, as much as I understand, the price action over the last couple of days. Other traders that want to trade the last minutes use a 1-minute chart, a 2-minute chart, whatever strategy you're using, that's fine. Being that this is a 24-hour market, and most of the investors and traders are not going to be watching the charts 24 hours, not even 10 hours, not even 4 hours. They just want to, understand what's going on, take advantage of the trade if there is a trade, and they're working, having a life. The life in front of the chart is can be a bit disappointing. Anyway, so that's the support level that I observed using this 30-minute chart at 109,300. Now, when I say 109,300, I mean really 109. I'm going to round the numbers up, because really 300, not that it's 0.3%, it's not meaningless. It's meaningless. So I'm going to, when it's 109,300, I'm going to say 109. When it's 112,500, I will say 112,500. But if it's 112,100, I will say 112. Okay, just to ease things up. So this is a clear support level. Now, if you are a buyer in this case, okay, if you are a buyer of Bitcoin and you observe over the period here, which is roughly 12 hours, maybe a little bit more, this 109,300 support level, okay, if you observe it, you can easily buy at 109,500. Maybe buy at 110 and have your stop loss under 109. What does it achieve? Okay, first of all, it achieves an entry with less than 1% of risk. So if your position, in this case, I'm going to round things up, is $100,000, meaning 1 Bitcoin, you're going to risk 1%, $1,000. If your position is $10,000, roughly 1/10 of 1 Bitcoin, the risk is $100, plus the commissions and some spreads, but those are mostly negligible. Okay, mostly negligible. It depends on the crypto, but in Bitcoin they are relatively negligible. Okay, so if you are looking for a long trade, obviously to buy at 110 using the 109 stop loss is better than buying at 111 or at 112 or at 113. Now, others are not using technical analysis and they're buying at random. And fine, that's fine. You can do whatever you want with your money. The idea here is to observe. Nothing is forever. Okay, so observe. Let's call them intraday or daily support levels that you can trust. Now, for how long you can trust 109 not to break? Sometimes you can trust it for more than a couple of days, sometimes a week, and sometimes the stop loss or the trade will fail immediately. The good news is that if you enter above 109, let's say 0.5%, 1%, or 1.5% above it, and you have the stop loss under 109, assuming there's not going to be another flash crash, then you lose 1% on your position. And if your position is, let's say, $10,000, you lost 100. If it is $100,000, you lost 1,000. That's up to you how big your position is, but that's definitely a small loss. Now, how do you manage this trade? Let's say you entered at 110, the stop loss is 109, and Bitcoin is moving higher, and now it depends on your strategy. What is your strategy? To have a $120,000 target, $150,000 target or 10 million target, like some others are pointing out. Again, this is none of our business here at Crypto Charts. The idea here is to help you enter the trade and manage the trade. Now, being that there are millions of Bitcoin traders and crypto traders across the world, each has a different target, each buys a different quantity, each has a different strategy, so it's very hard to cope with everybody. My suggestion is to use a normal risk reward. What is the normal risk reward? If you risk 1%, go for 5 to 10%. So try to get 5 to 1 to 10 to 1 on your trade. And if the trade is in the money more than 1%, move the stop loss to the entry and risk nothing. And sometimes the trade will, you want 10%, the trade will move up only 9% and start moving lower. And then your decision is to lock profits or not to lock profits. We will try to help with clear setups. Now let's move on. What happened after that? So Bitcoin climbed up from 110 through 116, and hold and take a look at what happened basically at 116. Basically, over two trading days, Bitcoin couldn't move over 116. It was capped at 116 and did not move over 116. Now, if you are a long trader, okay, what can you do? Can you take profits at 116? I myself, I would say no. It makes sense for crypto to move over 116, okay, and maybe make it back to the highs of the year. Keep in mind though that we are trading a different environment since the drop of 3 days ago. Having said that, if you are a short player looking for potential short play, this 116 resistance level is a gold mine. And why is it a gold mine? Because you can short Bitcoin at 116 and have a stop loss at 116,500 or 117. Okay, so now do you know anything about the price action of Bitcoin? You know that when you're risking 1%, which is $1,000, or 2%, $2,000, that's definitely considered relatively little risk, because the reward can be 5 to 10 times as much over a period of time. It can be a couple of days, maybe a couple of weeks, being that this event that we just pointed out is highly unlikely to repeat itself. This is not going to happen anytime soon. I mean, assuming Trump is not going to poop tweet anytime soon in the middle of the night when the volumes are very low and surprise us again. So it can happen, highly unlikely to happen again. So bottom line is, if I want to explain what's happening here in terms of support and resistance, if you are a short player, this is a great entry short. Now you can enter short here at 110, and you have to ask yourself, okay, are you a 5% risk taker, 10% risk taker? You trade without stop losses. Whatever you're doing, it's your business. The idea here is that if you want to be or try to manage, okay, the trades, you need to find entry point and the stop loss, and adhere to the chart on the daily. I mean, I didn't show it at this point, but the chart on the daily in Bitcoin after this this ugly move is a bit complicated to analyze. So because we still haven't deciphered completely what happened, okay, and what are the implications of this move, how many accounts were liquidated, how many people are not going to be coming back into trading Bitcoin after they lost their account. So, and maybe some other issues in the background that I'm going to discuss. One thing that I want to point out, that during this review, which takes normally between 30 minutes and an hour, which is a long period of time, and I know that many of you cannot listen, don't have the patience, we will have snippets. 3 to 4 snippets per day, sometimes every 6 hours or 7 hours. Okay, keep in mind we are humans and need our rest and have other stuff to do other than watch the charts. But the idea here is that we'll try to deliver as accurate action as possible using full disclosure. Okay, so the idea here is that if you are a trader that's looking at Bitcoin long term in terms of buy and hold, that's a strategy. You don't need us. Buy and hold. And those who use this strategy over the last 5 years, pretty much like in stocks, most of the stocks, the delivery or the profits were unthinkable. Okay, so that's one strategy. You don't need to watch the charts. You buy whatever you want to buy, and you take the risk or assume the risk, and things can happen. But this is the buy and hold strategy. Others that want to profit from the moves up and down need to work for it, or at least spend some time, 15 to 30 minutes per day, observing the charts and learning what's going on. I mean, hold and buy and hold strategies, it's fine, but definitely it's not something that you can learn from. Okay, there will be bull markets. We are definitely in a huge bull market for stocks and crypto, and maybe this bull market is gonna end maybe today, maybe in 15 years. Keep in mind the bull market in stocks started in 2000 and after the crash of 2008, so roughly in 2009 or 2008. So we are looking at 15-year bull market in stocks. 15 years, that's a huge period of time. And can it happen in cryptos? Yes, it can happen. Okay, but that's beside the point. So bottom line, like I said, we want to observe every crypto that's in the big 5 and some others that are interesting. And if I can post a trade, I will post a trade. So had I saw Bitcoin trading yesterday at 4 p.m. US time at 116, I would have posted long 116. The idea, there are two ideas. Okay, for those who like the long play, buy at 116. Use a 1% stop loss or maybe a 2% stop loss. And if you are looking for a short play, short under 116 and use the maximum stop loss, in this case 1%. And in this case, definitely at least for now, okay, definitely the losing side or the short side of this move is killing it versus the long side. The long side totally was rebuffed, and the short side is down nearly $6,000 at this point versus a risk of 1,000, assuming a 1 Bitcoin position. And again, I'm roughly averaging the price. Okay, so that's about Bitcoin. Now, what about now? Can we assume this support level? Let me draw it on the chart. Hold on a second, guys. Okay. Let me try and draw it. Okay, here it is. So the level is 109. Roughly 109. Okay, so can we use 109 as the support level? And the answer is maybe yes, maybe no. Now, if you are trusting the 109 support level, I'm not suggesting that I'm doing it right now, okay? You can post a limit order here at 109 and take a 1%, let's say at 108 stop loss. But again, the trend is clearly to the downside. It's actually aggressively lower with actually some pickup in volume. which is not something that you want to bet against. So you can see at the bottom of the chart there is some pickup in volume, not as much as the volumes that we had when the crash happened on Friday late on the day, but there is clearly a pickup in volume there, and that's typical to a sharp move lower or a strong move lower. Keep in mind all the Bitcoin crypto marketplace is very red today. Okay, so that's my take on Bitcoin right now. So I will come back in a couple of hours, check on the price action, and maybe we can decide, okay, we're gonna buy Bitcoin at this 109 support level if it holds. Now if it breaks straight through, can you short it, okay, at 109? I don't see a reason to short it at 109. The short should have been here. That's in retrospect, or maybe at another level if you see a clear technical pattern or a good risk reward. But clearly in the environment that we're trading and that we are in, this is the entry short, 116. Easier said than done. Okay, let's move to the Ethereum chart. Okay, so let's analyze what happened in Ethereum since Trump's tweet Friday 11 a.m. So you can clearly see this leg down as opposed to Bitcoin, which moved from top to bottom less than 20%. Ethereum moved more than, I would say, 25 to nearly 30%. I would say 25%, roughly. Again, the numbers are not that important. What's important is to see the price action after. So if we analyze the price action after, we can clearly see that 3860 was a clear resistance level. It was tested over a period of couple of days. Anybody that knows anything about technical analysis knows that this is, let's call it a cup and handle for pattern. Okay, not a perfect cup and handle. Again, it's not being drawn by a trader, it's being drawn by Ethereum. So a cup and handle formation, this is the stop loss, 3778, let's call it 3800 is the stop loss, and the entry is 3860. Okay, so the risk here is $60, roughly 2%. Less than 2%, but this is the risk on the trade here. If you risk it here, a stop loss is 2%. So you buy a $10,000 position, you risk 200. You can risk 300, you can risk whatever you want to risk. The chart says clearly that this is a technical pattern, and I would suggest risk up to no more than 2%. Now, what is the target of this trade? Again, is the target exactly 4,800? No, you're not a magician. You don't know what is the target. Okay, so from 4,300, that's 5 grand. 38 to 43, that's 5 grand. Risking, and 5 grand is more than 15% in this case. So you have a 2% risk and a 15% target. This is not a target. The target should have been way higher, but this is the top. Now, how do you manage this reversal? Where do you elevate your stop loss? To this level? Maybe to this level? Again, those are questions that any trader must answer by himself. I'm trying to answer those questions alongside you. Okay, so if you are in the trade, I would have to say that this is, according to my opinion, the stop loss where you need to raise your stop loss, and if it continues higher, you elevate your stop loss further. Keep in mind that you need to be in front of the charts. It doesn't require you to be in front of the charts every 12 hours, but once a day you need to be in front of the charts. Now let's say you're not in front of the charts and you have either the stop loss here or at the entry. Basically, your whole profits are kind of gone at this point. Is it the end of the move? No, you don't know. So worst case scenario, If your stop loss is at the entry, you're still alive. If your stop loss is at 3,800, nothing happened. You are in the same position that you were 2 days ago on October 12th. So that's all I can say about Ethereum. Now, where do I see the next entry point? Right now, I don't see an entry point. I don't see, a long play, being that I don't have a tested level, let's say 3,800. It may be pretty much like in Bitcoin, that this support level, which was a breakout level, will become now a support level. This is a phenomenon that we know from technical analysis in stocks, which trade exactly like Bitcoin. But when a support level becomes a resistance level, a resistance level can become a support level. Anyway, the idea here is that we don't want to guess. If the chart is telling us something that's technical, we want to trade it. For example, this entry here at 4,200, which was a triangle breakout. Okay, that's why I'm pointing it on the chart. Others will say, I don't see the chart, this pattern as a valid one. And again, it's that's why the price moves so much, because so many people are working the charts. Everybody thinks different, and whatever happens, happens. The idea here is that you want to protect your capital at all costs. Okay, so if you survive this, if you are long and you survive this event, you know that it's important to take trades, okay, according to some rules. Don't be over leveraged. That's one of the obviously clear results from this event. Anybody that was over leveraged lost the account. That's shameful, because it doesn't happen very often. Actually, it never happened, as much as I remember, in crypto. It happened, this type of an event happened in Forex a long time ago. With anybody that remembers, was the Swiss franc event that was maybe 10 years ago. And there were some events in stocks, but the events in stocks were regulated by the SEC, and the people didn't lose their accounts or their money. Okay, so but again, it's not going to happen in crypto unless the brokers will reimburse. I don't know how it's going to work, if it's going to work. Anyway, so if we're looking for a long trade right now in in Ethereum, I don't see an entry right now. Okay, let's move now to BNB. Not a good day for BNB as well. Oh, this is hold on. Why do you say it? Okay. Now let's take a look at BNB. I drew already the one of the technical analysis tools that I'm using, which is basically the Fibonacci retracement tool. Now, many people don't believe in Fibonacci, and I myself, I'm not a fan of Fibonacci or using Fibonacci many times. I'm just showing a way that you can look at support and resistance levels. Sometimes the support and the resistance level on the chart is not clear enough. In that case, you can do one of two things. Don't trade, look at other instruments, because there are dozens of cryptos that you can look. So you don't see anything clear in Binance, move to Ethereum or Bitcoin or Cosmos or Cardano or Uniswap or whatever you want to trade. Or don't trade, or trade and take into account that you're doing something that's not 100% clear, long or short. Anyway, this Fibonacci retracement is the retracement between the lows of the move on Friday and the highs after the move. So this is the move of Binance, which was all-time highs. 1375 is all-time highs for BNB. Now, what triggered this move? You can clearly see a pickup in volumes. Okay, those are normally during the US session, and the US session is still closed, so the volumes here are still very, very low. Okay, this is the non-US session. Let's call it the late or Asian session. Still, the market is not necessarily going to be a great mover during the US session. Not necessarily. But the volumes are definitely going to increase. Anyway, what I'm pointing is that you can clearly see on the pullback from 1375, the pullback to 1180, the 1180, which is 61.8 Fibonacci retracement from the highs of the move. So, and it was tested a couple of hours ago, 4 or 5 hours ago. Keep in mind, each bar here is 30 minutes. Now, let's say you have a limit order to buy at this Fibonacci level, okay? Where is your stop loss? And now you guess it alongside me. Where is this support level? Is it 1120? Is it this level 1057? Where is it? It's not very clear. Okay, so you can risk percentages. Let's say you want to risk here 1% or at least 1%, and if you enter at 1170, then you deduct let's say $100 is 1160. Okay, so 1170, it's going to be 1060. So $100 lower is 10%. 1% in this case will be, how much it will be? 1%, $100. Keep in mind, again, we want to see tested levels, and tested levels develop over time. As much as this 1175 tested level was tested and rebuffed, this level was now tested, and actually the price went lower, under 1175. Okay, so where is the next support level? Not really clear. Can you use the 50% Fibonacci, which is 1120? And in this case, you risk anywhere between $55. $55 in this case is roughly 5% on this move. Okay, sorry about that. 5% on this move is $55. Again, can you risk 5%? What is your strategy? Or, being that it is not clear at this point, not clear, wait. Let's wait. As much as we waited here, and it took us maybe half a day to decide to buy over 1105, okay, and take this trade from 1105 to 1375. Again, observe, act. Now, if you don't observe the 1105 and you enter at 1120, okay, where is your stop loss? 1105. If you enter at 1130, where is your stop loss? 1105. So again, if you enter close to the support level, you're going to save money just in case the trade fails. Now, if the trade moves higher, and in this case the trade moved higher $270 before moving lower. So $270 is roughly 20%. So this move up is 20% plus 20%. Okay, that's plus 20%. And the risk here on the trade lower is 1%, 2%. Anyway, you're looking at a risk reward, what we call R&R of over 10. Anytime the risk reward is over 10, you're into a magical trade. Doesn't happen very often when you risk one unit, whether it is 1% or 1,000, and you gain 10 times as much, and you can lock the profits without any problem. Doesn't happen very often. It happened in BNB. Why did it happen? I don't know. But again, I'm not going to spend time now reading the news, because instead of talking for 35 minutes, I'm going to talk here for 2 hours and 45 minutes, and nobody's going to listen to me anymore after talking so much. Okay, so this is BNB. This is the concept. Let's move now to another crypto. Okay, the fourth crypto in terms of market cap is XRP or Ripple. Now, I didn't draw any levels here on the chart because I want to do it alongside you, and because it's a relatively simple instrument to trade, but it's way more volatile in terms of percentages than the other ones. Why? Because the lower the price, the more volatile the asset is in terms of percentages. So let's first look at the move. The move started lower in XRP from the highs of 22.83, and it dropped more than 60% to 115. So if you remember, Bitcoin, the overall move in Bitcoin was less than 20%. The move here in XRP is more than 60%. So anybody that had leverage position in XRP, and I'm looking here at as you remember, I hope at the 30-minute chart. Okay, you can clearly see the 30-minute chart. So this move here, basically one 30-minute bar wiped out all the stop losses here in the platform, plus all the leveraged traders, and whoever is leveraged knows that he's leveraged, and being that I want to say stock, the crypto went down 60%. If you are leveraged above 50, you're obviously done with this trade. Okay, so, and again, depends on the level here, but the idea here is that there was very poor liquidity along the way. And why is it a flash crash? We described it and talked about it previously in this. Now, let's move on. This is history. What can we do right now? First of all, this consolidation here between 2.3 and 2.43 is an area where you want to buy. You can clearly see those levels. Okay, now this is obviously history. Crypto, in this case XRP, moved higher, and now it's coming back to these support levels. Keep in mind, the ultimate support level is this one. Okay. I have a problem. Hold on a second, guys. My mistake. Okay, now it's gonna be fine. Okay. This is the support level, 2.3. Let me draw it here on the chart. 2.3, and attach the price, so I'll know exactly what I'm doing. So 2.3 is the support level. Hold on a second. Sorry about that. You want to be as accurate as possible. Okay, 2.3. That's the support level. Now, if you are a buyer of XRP, what do you know? Again, if you trust this analysis, nothing is 100% proof, not even 50% proof. Depends on the timing and other factors. But let's say, like me, you're looking at XRP and you're thinking, okay, going back a couple of days, this support level held. Will it hold again? Can I use this support level as my stop loss? Okay, so I can do one of two things. Enter now at 244. Okay, that's the price, and use the 2.3 as stop loss, or place a limit order to buy when the price is going to come back, if it's going to come back to 2.34 or 33 or 31, and in that case move my stop loss roughly 1% or 2%, let's say 2% to 225. Okay, so in this case 225 is going to be my stop loss in the platform. Keep in mind, XRP is trading 24 hours. You cannot be in front of the charts and analyze them 24 hours. Nobody can. So that's one of the options here is to use a limit order to buy above, let's say 1% above 234, 230, and use a stop loss of 1 or 2% under 230, according to your personal strategy. Just to make a point how you can trade XRP. Of course, there are many other ways to buy at 250, to buy without a stop loss, to short with a stop loss over the highs. Again, that's all your personal strategy. Okay, let's move on. So, for example, guys, a call on XRP will look like this. Buy XRP with the limit order at 240. Okay, 240, stop loss 230. That's how an example trade will be, and this is how it's going to look basically here on the chart. So the raw idea is going to be posted like long limit XRP 2.4, stop 2.28. There will be also stop orders like buy stop 2.5 with if the price is above the current price, and of course it's a limit, then the price will be under the current price, and there's always be a stop loss in the platform. I'm not going to suggest any thing about the quantity. Everybody wants if you want to buy a $1,000 position or a $100,000 position or $1 million position, that's your personal risk that you will need to bear. Again, you don't need to accept the idea. You don't need to accept the idea quantitatively. You can use the entry. You may not use the stop loss and so forth. So again, it's a raw idea. It's based on my personal experience, and my incentive is only for the best outcome. So I don't have any other interest other than posting the best of the best that I can for you guys, those who are watching the Crypto Charts channel. So that's basically it. Again, this is an example. It's not an idea. It's a sample idea, and the idea will come once a day, twice a day, maybe 4 times a day, and sometimes there won't be ideas for a day, 2, maybe sometimes 3 days. It all depends on how the market reacts overall and the setups that the market creates. That's pretty much it. Nearly 45 minutes. I hope it was illuminating. I wanted to talk about Cardano as well. I will show the chart. Hold on a second, guys. Here you see an example of the trade or potential trades in Cardano. The symbol for Cardano is ADA. You can see the reversal over 6.5, 0.65, the stop loss at 0.63, 635, and the risk here is 1/3 of 1%. Sorry, it's 2 cents. 3%, sorry, not 1/3, but 3%, and how the trade acted, how the trade pulled back, the resistance clearly posted on the chart. Again, most cryptos look alike, and this is a look-alike market. You just need to fine-tune, find the best entries which carry the best patterns or the best technical patterns, which means less risk. Obviously, you want to trade basically the most or the best cryptos, meaning the best markets or the biggest markets like Ethereum. You want to trade obviously Bitcoin, you want to trade Cardano, you want to trade Doge, you want to trade BNB. Sometimes there will be a trade in Dash, which is let's call it in terms of stocks, small cap or a micro cap. You want to trade Solana, which is also a relatively big crypto in terms of market cap. Okay, that's pretty much it. Let me see if I have anything else. ETH, Ethereum, we talked about SUI. Okay, why SUI? it was on my watch list, SUI, because in the morning, and it's another small cap from the crypto scene. Hold on a second. First of all, why I was watching SUI, because it was at the top of the list. Right now Dash is down 10%, SUI is down 9.3%. In the morning SUI was a bit lower than Dash. Anyway, so the price action, you can clearly see the drop. Friday it dropped from 3.47 to 2, so that's a 40% move lower. That's an aggressive move. Nearly, yeah, it was 40% down. It recovered very fast. Then it created this reverse cup and handle formation. Again, those who know anything about the technical analysis, it helps. It really helps. Doesn't mean that patterns don't fail. Patterns do fail, but before they fail, they give you a good technical analysis. So this is the cup and handle reversal that traded as high as 3. So for roughly from 250 to 3. That's 25%. Sorry, 20%. This is a 20% move. So I hope I'm not making mistakes in terms of profits. I'm sorry if I'm doing this type of mistakes. And now we can see a 10% pullback, and maybe here a double bottom. Again, those who know anything about technical analysis can use it. Is it a long here? If you think it is a long, you can use this stop loss under. Let me draw the exact number. Hold on a second. Here it is. Under 265. And we always take some precautions, so it's not 265, it's going to be, hold on a second, $263. Okay, so anywhere you buy here at 272, or whatever you want to buy, if you want to buy, the stop loss is now can be, again, according to a short-term strategy. Okay, now what is the target? Obviously the target is 3. That makes sense. I mean, just looking at the chart. Can it break 3? I don't know. But again, if you're looking for a long trade, this makes sense that your first target is going to be 3. And again, I'm not talking here or going to talk trade management or try to teach trade management in these videos. Okay guys, again, thanks a lot for watching. Do like and subscribe. As I said before, we're gonna try to post trades as much as we can, deliver them with you on time to YouTube or on YouTube with our expertise, and hopefully you will follow us and deliver good results. Thank you again, and see you in the next video.